In this video, I'm going to go through 5 simple steps that will allow you to develop the proper framework for you to maximize your gains and create life-changing wealth in this next crypto bull market here in 2024. In this video, I'm going to show you how to create your portfolio structure. We're going to talk about how you go about investing into narratives, how you conduct a proper fundamental analysis, how to cycle your profits into other projects, take profits, literally everything you need to know to set yourself up for success in this bull market. So before we get started, I do have to say this video should not be taken as financial advice. Please consult your financial advisor before making any investment decisions. This video is for your education purposes only. So guys, let's get right into it. So the cool thing about investing into crypto is that it offers asymmetrical investment opportunities. It's literally like investing into the S&P before the roaring 20s. It's the smallest major asset class and it's going mainstream. Like, when was there ever a time in life when someone was born when a brand new asset class was going mainstream and being adopted by institutions? Right now, the crypto market cap is a little over $1 trillion. In the next 10, 20, 30, 40, 50 years, it's going to be a 20, 30, 40, 50, 100, $200 trillion asset class, just like everything else, guys. So it offers very little downside because it's already stamped, but high upside because it's still the beginning. People who invest into crypto right now, the right way with the right projects, will get to ride it as it goes from a $1 trillion asset class to a multi-trillion-dollar asset class like everything else. All right, so let's hop right into how you develop your framework. So the first step is you want to create your desired portfolio structure that's in line with your risk tolerance, personality, and goals. And you want to have your own goals. Like, how much money do you want to make? How risky do you want to be? How old are you? What are you making money for? If you have a family, like, you need to write all these things down and go through it. And believe it or not, this is when you use your emotions. People say, you don't want to use your emotions at all when you're investing. No, you want to use your emotions when you're coming up with your plan, and mainly when you're coming up with your take profit strategy, so you can figure out what type of investor you are, because as a general rule, there are two. There's the long-term investor who likes large amounts of profits less frequently, and then you have the investor who likes small amounts of profits more frequently. And as a general rule, if you're more impulsive, you're probably the investor who likes small amounts of profits more frequently. If you're more patient, if you have high risk tolerance, you're good under pressure, you're probably a long-term investor. Now, there's no right way or a wrong way. Like, you have people like Warren Buffett, who's a long-term investor, who is a multi-billionaire, right? That worked great for him. But then you have investors like James Simons, who pretty much help spearhead the algo trading quant revolution. He has a book called The Man Who Solved the Markets. And, he made billions doing that too. People still don't even know his strategies, right? So what one person's rule would say, I will never do this, is the same exact way another investor made hundreds of millions of billions of dollars. So the right way is the way that aligns with your personality, risk tolerance, and goals. So after you come up with that and you know what kind of investor you are, you want to create your portfolio structure. We're still on step 1. So my structure, just to give you an example, is 20% Ethereum, 30% cash, 30% altcoins, mainly real world assets, layer 2s. And then I have 20% set aside for yield farming. My cash flow, and this is a biblical principle, by the way, my cash flow, so that I'm constantly accumulating more cash and more altcoins so that I can add to the other part of my position. And the other part, where I'm making capital gains, I'm able to add to my yield farming position. I'm going to make a video on how the concept of yield farming is actually verified biblically later on this week. So be on the lookout for that. Step number 2, after you've came up with your portfolio strategy, you want to fill in the spaces. It's just like coming up with a blueprint for the house. You dig the hole and then you start to fill it with dirt and the wood and the foundation and the cement and all that stuff. It's the same exact thing. We're building our investment house. All right, so to do that, I recommend only invest in what you understand. And to go a step deeper, it's a good book called Narrative Economics that I recommend everyone read. Here's the notes on mine if you want just the spark notes, but definitely give it a read if you haven't. But you want to find a narrative to get behind, because narratives drive investments. This crypto bull market has more narratives at play than we've ever seen before. I made a video on what I believe will be the top 4 narratives that will create wealth in this bull market. Those 4 narratives are layer 2s, real world assets, AI, and depin, which is decentralized physical infrastructure networks. There are more. You got ZK rollups and BRC20s, and you also have GameFi. So what you want to do is you want to, whichever narrative resonates with you, slash, if you already know about gaming or if you already know about finance, like RWA is what I'm focusing on the most because I know and love finance. I've been studying finance and the economic system for years now. Find the one that resonates with you. Don't try to invest into all of them because you don't want to spread yourself thin. You want to spread yourself thick across things that you know, right? After you found a narrative, you want to research that narrative, all right? So now let's go on to the third step. You research the narrative. You know why it's going to be a big narrative. You understand how it's going to bring a lot of money in, et cetera, et cetera. So at this point, the third step is to conduct proper fundamental analysis on the top projects within that narrative, right? You want to find all the ones you like, all the ones you would put money behind, and then you want to give them all a score, all right? I like to narrow it down to as few as possible because it's easier to keep track of. You guys can go on DeFi Llama or you can come here to CoinGecko. You can type in whatever the category. I typed in real world assets and it gives you the top ones. I like real world assets because I think it's going to bring in the most money. It's going to bring in institutions. And there isn't a real world asset protocol that's even in the top 100. And I believe it's going to be some that's within the top 50, 40, 30, 20, maybe even 10. All right. So you research these narratives, whichever one you think has promise, whether it's a good team, good product, you want to look at the tokenomics too. Like you want to look at everything and give it a score and you narrow it down to the top 3, top 5. And this also depends on how much time you have to invest. If you have less time, then it might be a good idea to go more broad. And this is why I recommend investing into an index if you don't have a lot of time, but there aren't any crypto indexes. So you kind of have to make your own index. And an index is just a basket of assets. So the less time you have, the more you want to invest. And then, you come up with a take profit strategy for each one. And I say that it sounds contradicting, but if you have more time, you're managing less assets. You'll think if you have less time, you want to be less diversified because there's less you have to keep track of. But the more diversified you are, the more likely you are to pick a winner. And remember how I was saying it's asymmetrical. It's a higher likelihood that you'll win. But if you have more time, I recommend being less diversified because it's easy to keep track of. And, if you had all that time to research, you should go more all in on the ones you believe in. All right, now that brings us to step number 4. You want to allocate your capital according to your conviction. And then this is the most important part. Investment structure is more important than the investment itself. My perfect example is that we all heard of the Doge guy who bought Doge super cheap and he rode it up to millions of dollars and didn't take any profits and it went back down. I bet you he's wishing he's taking profits. Doesn't matter how good the asset is. If you don't have a plan to take profits, it doesn't matter. You're going to think you can time the top. You're going to rely on your emotions. And that's when you don't want to rely on your emotions. If you don't have a plan and something's going up and your emotions telling you to buy when you should be selling, or when the market's going down, your emotions telling you to sell when you maybe should be buying. So you want to come up with a take profit strategy, but there's more than one. And I made a video on how to master the art of taking profits. Definitely give that a watch if you haven't. But there are 3 different triggers that I recommend you set up. You have a price trigger. So you come up with a conservative and aggressive estimate as to where you think the asset you're investing into is going to go to. And I made tons of videos on this. Maplefinance, Pendle Finance, you name it. Just go through the channels and look for the videos where I say how I'm gonna turn X amount of money to X amount of money. It's the take profit strategy videos. You have your take profit set up to where even if the conservative doesn't get hit, or if the price exceeds your aggressive estimate, you still have a strategy that is optimized for you to make a good amount of money no matter what happens, okay? Also, when it comes to price triggers, you wanna look at the benchmark asset, right? So if you're investing into crypto, you wanna look at how Bitcoin's performing, because whenever Bitcoin hits 200K, depending on how the trend is going, if it's consolidating, I'm probably just going to sell everything because I know Bitcoin is probably going to drag the whole market down with it when it falls. The second take profit trigger is a time trigger. You look at the 4-year cycle theory and it's proven to show that after the Bitcoin halving, the market usually pumps for about 2 years. So it might be a good idea to sell most of your bags after 2 years of the halving, or, and this is what I recommend as well, have a portion of your bag set to the side that you don't plan on touching for 5 to 10 years. Hold it for bull and bear markets. Guys, do you know how much money you could have made if you held Bitcoin for 10 years since its inception? You held Google, Amazon, Netflix, Apple since its inception. A 10K investment will be worth millions. 10K investment of Bitcoin in the beginning will be worth billions. All right. So it's good to have a take profit strategy. You take some of those profits and you cycle it to your long-term bag. But it's also good to just be able to take some profits and, just keep building up your stack and investing intelligently. If you want to put in that work, just have only a long-term bag. Maybe you work your job. But if you want to be serious about investing and not treat it as a hobby, but something you take serious, it's a good idea to have a take profit plan, but also a good idea to have a bag that you don't touch for multiple years. Some of my long-term holds are obviously Bitcoin, Ethereum, Radix, Chainlink, just to name a few. The last one is a trend trigger. So if you see Bitcoin, maybe it's starting to break down. It broke below a major level of support and it turned it into resistance. And now you get a nice big red candle print to the downside. Well, hey, maybe you want to GTFO, get the fuck out, because that can signal that the trend is changing. And like I said, Bitcoin drags everything down. You could set it up to where if one of those three triggers are hit, you sell everything or sell a portion, or you can have it set up to where if one hits, you sell 50%. If two hits, you sell 70%. If three hits, you sell 90% or whatever. And this isn't including your long-term bag. And now the fifth and final step. Boom, boom, boom. You made it. You're in profits. You took some profits. You're sitting on a lot of cash. So now what you want to do is you want to look at what assets you have on your radar. Remember when I told you to go through assets and you narrow it down? Well, whichever ones you didn't get into, if they haven't pumped yet, you start over from step 2. You cycle your money into the plays you haven't bought yet / haven't pumped. Make sure you're not buying the top, guys. And also, you don't want to bet the whole farm. You don't want to take all your profits and cycle them and just lose them. Like, you want to keep some of that cash. Just keep some of that cash sitting on ice, single side, stake it. Maybe enter into a USDC, USDT yield farming pool, get 5 to 20%, whatever. But some of your profits you don't want to touch. You want to wait till the next bull market, get a yield on it, so that you can build up your cash position and be able to look at opportunities as they present themselves, even if it's in other asset classes. And guys, you want to do this until the bear market hits. Maybe have some yield farming pools set up to where you're getting paid passive income to buy the dip. I've made plenty of videos on that. So guys, if you got value from this video and you like this kind of content and you want to learn how to manage your portfolio like a professional institution, click the link in the description, book a free strategy session with our team, or visit KnowItAll@XYZ. You can do it there as well. We have our Know It All Academy course that goes through everything you need to know regarding fundamental analysis, technical analysis, yield farming, how to generate passive income on high quality assets with fairly low risk. Literally everything you need to know to become a successful crypto investor and overall investor, period. If that sounds like you and you're self-motivated and you want to be around like-minded people who take investing serious and be able to have access to myself as well as elite coaches who invest for a living, book a free call and we can't wait to hear from you. But other than that, I'd like to conclude this video. If you got value, I ask that you consider subscribing, drop a like, drop a comment. Let me know what project, what concept, what strategies you want me to cover next. But in the meantime, between time, I thank you guys so much for watching. I love every single one of you, and I'll see you guys in the next video. Take care, God bless, and trade safe.